I'm very sorry for calling for this session out of the blue. I know we didn't have a session scheduled for tonight, but I feel like I needed to explain how I entered, or rather how I took my trade with the results which I posted earlier. So let's just do a rundown on how I took it. This is more like the top-down analysis. So this is V10 1S synthetic indices. If you remember on Sunday when we were doing our weekly projections, we said that we are bearish this week because from our weekly time frame, remember, we had a fair value gap right there, and it was rebalanced and price was pushing to the downside for a swing low that is below this one. So yesterday, this is how I did my analysis. From the projections that we were bearish, I saw this fair value gap with a very aggressive movement which took out this low, this low, this low. Then after that, it started to push to the upside, rebalancing these imbalances, this one and this one. So after tapping into this fair value gap, price started to push to the downside. But before we proceed, I want you to understand that when price tapped into our weekly fair value gap, it formed an intermediate term high, which is a protected high right there. And now price tapped into this daily fair value gap, this bearish fair value gap on daily time frame. It also formed an intermediate term high, which is again protected. Price pushed to the downside, failed to break this low, but we are still bearish, remember. It started pushing to the upside. So as price was pushing to the upside, I wanted to see a fair value gap where I was gonna take my shorts. On a daily time frame, there was this fair value gap, but it wasn't significant enough for me, so I dropped to the H4 time frame. But before we go any further on the H4 time frame, I want you to see what was happening when price was moving here. Remember, I said I wanted to see a fair value gap. So this movement right there is the same as this one on H4. Price pushed to the downside, breaking this low, and started to push to the upside again. Why is it pushing to the upside? It wants to rebalance an imbalance. Where is our imbalance? This is our imbalance, this one, this fair value gap. So before price broke this low, it formed this high, which also formed a pool of liquidity. This high, it's not that significant for us to say that we wanted to trade from these fair value gaps. Why? Because we have this big fair value gap which needed to be rebalanced at least 50%. It's called consequent encroachment. I don't know if I said that correct, but yeah, consequent encroachment, which is the 50% level of this fair value gap. So this is one of those perfect setup whereby if you see them, you start celebrating before price even comes to rebalance. Why? Because with a fair value gap, we have pool of liquidity, buy side liquidity. So price takes out, sweeps liquidity, filling our fair value gap to the 50% level, started to push to the downside. But how am I going to take my trade? Again, I want to see some form of change in delivery, market structure shift, choke, whatever you want to call it, just different technologies, but just describing the same thing. So we want to see some form of change in delivery here, break of structure of some sort. Yeah. So as price was pushing to the downside, it broke this low. So after breaking this low, I wanted to see a fair value gap, like a perfect fair value gap, where I could take my trade. Do we have a fair value gap? No. So we drop to the a time frame that is lower than the current that we are doing our analysis on. So we move to M15. On M15, there's something that is interesting that is happening. So from M4, we have this break of structure, price coming to rebalance some sort of imbalance. This is where we start to see some imbalances on M15. So on M15, inside our fair value gap on H4, we have price reversing. Price comes down, fair value gap right there, immediate rebalance, forming an intermediate term high, which is a protected high. Price breaks this low with this strong movement, forming a fair value, an order block right there. This is our order block. So from this order block, we have price struggling to push to the upside for forming these relatively equal highs, which is another pool of liquidity. So price swept liquidity right there, tapping into the order block. Then it pushed to the downside, taking buy side liquidity, taking sell side liquidity. It comes, pushes to the upside again. What do we want to see? Fair value gap. So once again, we push to the downside, looking for our PDR raise. Price pushing to the downside, breaking this low, starts to push to the upside again. There is a beautiful fair value gap right there, which is indicated by this violet color. By the way, whenever you see this rectangle with this violet rectangle, it means that's where I took my trades, or that's where I ended my trades. So this fair value gap is resting inside this order block. From the actual definition of an order block, it's just a series of candles that initiated change in delivery. So what initiated this whole big movement? This break of structure. So this candlestick, this is our whole order block right there. This is our whole order block, this one. And inside this order block, we have a fair value gap. which is the perfect indication or a strong indication that we should definitely take these sales. So what does price do? Price pushes to the upside, tapping into our fair value gap, 50% of the fair value gap. As soon as price entered this fair value gap, I then entered my trade. Where is my stop loss? My stop loss was resting above these highs, because this high becomes protected again. So in the event that price was going to push to the upside, my stop loss was right there. 4 position, like I showed you from the results, each with a lot of 3 lots, which is quite big for, it's just a lot for this pair. But my account was over $1,000. So from year to year, one position I was risking $25 from one position times 4, which is around $100. So I was risking $100 from a $1,000 account. For me, it was fair. So I want to explain something here. In the event that price fails to respect everything that I was saying, it continues to push to the upside, I can comfortably take my loss. Losses, they are part of the game. No matter how good your system is, no matter how good your strategy is, you are going to take some losses. You might be in a winning streak for a very long time, like the one which I had from was it March to May. I didn't even lose a single trade, which was crazy. But yeah, it happens. It's a winning streak, but it doesn't mean that I don't take losses. I took a loss, the one which I posted on TikTok, that one. So it's part of the game. You have to accept the losses, but you need to manage your losses. You need to practice proper risk management. So this is where my stop loss was. From year to year, I was risking only 100% from more than $1,000. So for me, it was quite reasonable. Price reacted from our fair value gap. It started to push to the downside. Suppose I'd missed this entry. Where was I gonna take my trade? Price pushes to the downside, breaks this low. So when price broke this low, there is a fair value gap right there. We have price that pushed aggressively. This is actually almost the same as what price did on H4, if I'm not mistaken, where we have shorter an odd high created just below our fair value gap, because on M3 there is also another perfect fair value gap just above these highs. Price just took out liquidity right there, swept liquidity, tapping into the fair value gap, pushed to the downside. This was also another low risk trade with good returns. So this is how I did my analysis, guys. I'll see you tomorrow when we do our next lesson. So thank you very much for your time. I know this wasn't scheduled, and I appreciate all of you for showing up. If you want to go through it, I will be uploading it on YouTube. So good night.